Most people will spend the next 10 years doing exactly what they did in the last 10. Trading time for money. Buying things they call assets that aren't. Wondering why nothing is changing? The problem isn't effort. It isn't intelligence. It's the vehicles they're choosing. And in the next few minutes, I'm going to show you the 5 assets that actually build wealth, including one that has nothing to do with money and everything to do with how fast every other asset on this list grows. Let's get into it. Here's the uncomfortable truth about how most people think about assets. They think stocks, maybe property, maybe a savings account paying 4% if they have done their homework. And those things aren't wrong, but they're incomplete. And in some cases, the stuff missing from that list is costing people far more than a bad investment ever would. There's an $84 trillion wealth transfer happening over the next 2 decades, the largest in human history. Research shows that 70% of wealthy families lose their wealth by the 2nd generation, 90% by the 3rd, not because of bad markets, not because of recessions, because the next generation was never taught to think like an investor. That's an asset problem. Specifically, a problem of not knowing which assets actually matter. So here are the 5 that do. And I'm going to start with the one that sounds the least like a financial asset, because it might be the most important one on this entire list. Asset 1, high income skills. Everything else on this list requires capital. Capital comes from income, and sustained, growing income comes from one place. Skills the market values highly and can't easily replace. Here's the maths. Someone earning £50,000 a year and saving 10% invests £5,000 annually. Someone earning £200,000 a year and saving 20% invests £40,000 annually. At 10% compound returns over 30 years? That's the difference between a comfortable retirement and a life-changing outcome. The highest leverage financial decision you can make isn't which stock to buy, it's dramatically increasing your earning capacity. Sales, financial expertise, marketing at scale, building and leading teams, skills at the intersection of human judgment and money, the ones that can't be fully automated and are only amplified by technology. That's where the ceiling keeps rising with mastery. Skill development isn't something you do after your finances are sorted, it's how the clock starts. Asset 2, your own business or equity. When you work for someone else, the relationship has a ceiling built into its structure. Your best hours, your best ideas, your best years, exchanged for a salary. When you're exceptional, your employer benefits disproportionately. A business works differently. When it's exceptional, you benefit disproportionately. You don't need to build the next unicorn. You need to build something that generates reliable profit and eventually runs without you. A business generating £300,000 in annual profit can sell for £1 to £2 million. That's the game. Build something real, make it profitable, systematize it, then either enjoy the cash flow for life or take the exit and redeploy the capital. And if starting from scratch feels like too much, Asset 3 gives you a shortcut. This next one is the most underrated path on the entire list. Almost nobody talks about it, and it skips the hardest part of building a business entirely. Asset 3, small business acquisitions. Right now, thousands of profitable small businesses, cleaning companies, niche software tools, local service providers, are owned by people who want to retire. Most never appear on any public market. They're sold quietly between people who know where to look. Many owners will do seller financing. You take over the business and pay them from the profits as you operate it. Acquisition multiples on small businesses typically run 2 to 4 times annual earnings. A business generating £150,000 in annual profit might sell for £400,000. If it maintains that profit for a decade, you've made over £1 million on that investment. And you still own the business. You don't need to build cash flow when you can buy it. Asset 4, index funds and long-term market investing. This one isn't glamorous. That's exactly the point. A low-cost S&P 500 index fund has outperformed the vast majority of actively managed funds over every significant time horizon. Not because it's clever, because it's consistent. It removes emotion, removes timing, removes the temptation to react to headlines. Combined with high income skills generating serious capital to invest, this is the engine that runs quietly in the background and compounds everything else you're building. You don't need to be smart with this one. You need to be boring for a very long time. Start early. Add consistently. Don't touch it. Asset 5, your health. None of the other 4 assets on this list matter if you're not alive and sharp enough to manage them. This isn't motivational filler. The data is clear. People who exercise regularly earn more, sleep better, and make measurably better financial decisions. A long-term study tracking over 1 million Americans found that the top income earners lived an average of 14 years longer than the bottom, driven primarily by nutrition, environment, and preventative care. Your health is your operating system. Every decision you make about money, business, and opportunity runs through it. The person operating at 60% capacity because they're exhausted, and sedentary looks at the same opportunity as a high performer and sees a risk instead of a return. Invest in it the way you invest in a portfolio. Consistently, long time horizon, no expectation of overnight results. The compounding is slower and quieter, and more important than almost anything else on this list. 5 assets, 1 decade, your call. High income skills start the clock. A business or equity removes the ceiling. Acquisitions buy you cash flow you didn't have to build. Index funds compound everything quietly in the background. And your health determines whether you're sharp enough to do any of it well. Pick the 2 or 3 you're not currently treating seriously, and start there. If this reframed what you think of as an asset, hit like up. It helps Budget and Build reach more people who need to hear this. And subscribe for more straight talking money content without the noise. See you in the next one.